In this video, we are going to walk you through some fund accountant interview questions and answers. Before we start, please subscribe, like and share. In each question or section, we will give you 10 seconds to think about your answer. Feel free to comment below answers you have for those questions. Also, let us know video topics that you would like us to create. Make sure that you stay with us till the end of the video. Let's begin. Let's spare a few seconds to think about what kind of fund accountant interview questions you have in mind. Feel free to comment below your thoughts. Number 1. Which financial statement do you feel is essential to projecting profit from revenue? In my experience, the cash flow statement is often the first document I evaluate to get an overall idea of financial health. The cash flow statement allows me to assess the current incoming and outgoing company funds, which gives me insight into how much to expect in revenue and expenses with this information. I can create projections and later establish objectives that support continuous growth. Number 2. How do you distinguish between accounts receivable and deferred payments? I typically communicate with the accounts receivable department to gather the appropriate documents before evaluation. When I assess the receivables accounts, I look for prepayments, which I document as deferred revenue. I then record the outstanding payments in the accounts receivable reports. Number 3. When would you capitalize company purchases? When the company makes a purchase with an expected lifetime use longer than 1 year, I can capitalize this value. This accounts for any depreciation, which I typically advise to carry over, as it can be an advantage for deductions when preparing taxes. Number 4. Describe a budgeting method you're experienced with using. In my previous role, I worked primarily with the incremental budgeting method, which allowed me to better allocate company funds. With the accuracy incremental budgeting provides, I can better assess financial performance for each accounting period and estimate future performance when assessing department and team budgets. Though, I like to get a general idea of what to expect using the zero-based method to allocate funds according to necessity and efficiency of cash flow. Number 5. How would you evaluate the net assets of our company? I would first evaluate the total asset value of the company and deduct all liabilities from this total. This gives me the gross asset value of both short-term and long-term assets. I divide this value by the number of any outstanding shares the company provides in payable dividends. The resulting net asset value allows me to allocate excess funds more efficiently.